All right, so you want to get smart on Teradyne's Q3 earnings, like fast?
Fast?
Fast. Yeah, buckle up because we're diving deep into their latest call.
Deeper than usual.
Deeper than usual. We're going to pull out the nuggets you need.
The good stuff.
The good stuff. From AI's surprising impact to why robots are suddenly...
Like really suddenly.
Like really suddenly hot property.
Yeah. It's a fascinating case study.
So we're using their Q3 2024 earnings call transcript, right?
That's right. And I think you'll be surprised.
By some of the trends we're seeing.
Definitely.
This matters whether you're like an investor...
Just a tech enthusiast.
Yeah, or just curious about where things are headed.
Because this call reveals some key insights into the industry shaping our world.
Okay, so let's get into it.
Let's do it.
Teradyne beat expectations this quarter.
They did.
And they say AI is the main reason.
Uh-huh.
But it's not just the obvious stuff like demand for chips.
Right, their compute revenue.
Yeah.
That's the segment where they test, data center networking equipment.
Oh, okay.
It has exploded. It's 4 times higher than 2023.
Whoa. 4 times higher.
4 times.
Okay, so it's not just the AI chips themselves.
Go.
What's driving this massive demand on the compute side?
Cloud computing is a big factor.
Oh, makes sense.
All those AI applications need huge processing power.
Yeah. Uh-huh.
And that means more servers, more network infrastructure.
Which Teradyne helps test.
Exactly. But here's the thing that's really interesting.
Okay, tell me.
This AI boom is impacting other areas too.
Like what?
Well, they say the demand for AI servers, it's driving up the need for memory chips too.
Really?
Yeah, specifically the kind that go into enterprise solid-state drives.
Enterprise grade?
Yep. We're not just talking about specialized AI chips anymore. It's like the whole memory ecosystem.
Why is that? What's so special about these memory chips?
It all comes down to speed.
AI applications need to access tons of data super fast.
Oh.
Think of it like this. The AI chip is the brains,
Mm-hmm.
but it needs a really fast memory system.
Like it's short-term memory? Exactly. That's where these high-performance memory chips come in.
They allow AI systems to process information much faster.
Way faster than traditional memory.
And Teradyne's providing the testing technology for these.
Exactly. They're making sure these crucial components
Can handle AI.
Yep. They're so bullish on this that they increase their market size estimates,
For
both compute and memory chips, for the rest of the year.
Wow. Okay, so AI is really driving things forward.
It is.
But there's also this prediction of a slowdown in Q4.
Right.
What's going on there? Should we be worried?
It's not a simple story. They're expecting memory revenue to moderate.
Okay.
After a huge surge in Q3.
A surge.
Yeah, driven by those high bandwidth memory chips, the HBMs.
The HBMs.
They're specifically for AI, and there was a rush to get production going.
Okay, so it's not that AI demand is going away.
Not at all. Teradyne has been very clear about that.
Okay.
AI demand is still strong.
So what's the deal with the slowdown?
It's more about timing, some product cycles, and also a cooling off in areas like wireless.
Wireless, why?
Probably because the rollout of Wi-Fi 7 has been slow.
Interesting. So we're seeing a little dip because one area cooled off, but the overall story...
The overall story is still the same. AI is fueling growth.
Okay, got it.
It's nuanced, but the long-term trends are clear.
Makes sense.
AI is reshaping the landscape, and Teradyne is at the forefront.
Okay, and that leads to something I find really interesting, robots.
Robots, yeah.
You'd think in a tough economy, industrial automation would be one of the first things to go.
You would think that.
But Teradyne's robotics business is actually growing.
It is, and it's remarkable.
How remarkable.
Their competitors are seeing like double-digit declines.
Double-digit?
Yeah, but Teradyne's robotics revenue is going up.
What are they doing differently?
They're being very strategic.
Okay, like how?
First, they're expanding into new applications for robots.
Oh, okay, give me an example.
They've introduced heavy payload models to their UR line.
UR line?
Yeah, for tasks that need more strength.
Yeah.
And they're launching this new product called the Mir 1200 pallet jack.
Okay, what is that?
Of AI-powered forklifts.
AI-powered forklifts. That sounds like science fiction.
It does, doesn't it? But it shows how robotics is evolving.
Yeah.
These aren't the simple robots of the past.
Yeah.
They're getting more intelligent, more versatile.
And Teradyne's leading the way.
They are.
Okay, so they're expanding into new markets.
Right.
What else are they doing?
Laser focused on their channel strategy, building a network of partners, OEMs,
Okay.
who use Teradyne's robots in their solutions.
And is it working?
Their OEM revenue is up 50% year over year.
50%. Wow. So it's not just about riding the AI wave, it's about staying ahead of the curve in robotics, too.
Exactly. They're doing both.
So what are they saying about 2025? Any hints?
They're expecting revenue growth across all their businesses next year,
All of them, including robotics.
including robotics, and they're making big investments,
Where?
particularly in their semiconductor test, business engineering go-to-market strategies. But here's the key takeaway.
I'm listening.
They're committed to showing operating leverage.
Meaning?
They think their revenue growth will outpace those investments.
That's a big statement.
It is.
It suggests they're seeing strong signals for 2025.
Strong signals.
But they're not giving everything away just yet.
Right. They're confident about the future.
But they're playing their cards close to the chest.
Exactly. Strategic.
So Teradyne is betting big on a future where AI isn't just software.
Right.
It's deeply integrated into the hardware that powers our world.
From data centers to factory floors.
Yeah, it's a fascinating glimpse into where technology is headed.
Absolutely. And what's especially interesting is how this is playing out in the semiconductor industry.
Which is at the heart of the AI revolution.
Exactly.
Right, let's talk about that because one analyst brought up this point about testing times for these new AI chips,
Oh, wait.
specifically the NVIDIA Blackwell.
The Blackwell. Uh-huh.
Apparently, they're taking 30% longer to test than previous generations.
30% longer.
Oh.
Wow. And this is where we see the complexities of this AI world.
Yeah, it's getting complicated.
Those longer test times are directly tied to how complex the chips are.
So can Teradyne's system-level test technology help with that?
Their SLT, it can, but it's not like a magic solution.
Okay.
Teradyne CEO Greg Smith, he pointed out that SLT is more about mitigating the growth in those test times.
So not necessarily like dramatically reducing them.
Right. If they didn't have SLT, those test times would probably increase even more.
Because the chips are just getting more and more complex.
Yeah, exactly. It's a constant challenge.
So SLT is more of a countermeasure.
Yeah, to keep up with the complexity.
Okay. And they see opportunities in testing AI accelerators like the Blackwell.
They do.
But their bigger opportunity
Is with those vertically integrated producers.
You mean companies like the hyperscalers?
Exactly. They're
Yes.
designing their own silicon for AI.
And as they deploy more of their own custom chips.
That's what's going to drive Teradyne's growth.
So it's smart to focus on those emerging players.
Very smart.
Yeah.
They're the ones building the future of AI.
And there's another layer to this, the networking aspect.
Networking, right?
As AI models become more complex with more and more nodes, the amount of networking needed to connect those nodes.
It's growing even faster.
So this is good for Teradyne because they're also a leader in testing networking equipment.
Got it. The demand for test seconds.
That's seconds.
It's how much testing is needed.
Okay.
It's skyrocketing.
It sounds like a good time to be in the semiconductor test business.
It does.
But what about their robotics business? We were talking about how it's growing.
Yeah.
But an analyst brought up a point about their long-term growth rate.
Okay.
Looking back over the past 5 years, it's only been about 5%.
5% annually compounded. Yeah.
Is that a concern?
It's a valid observation, and Smith addressed it.
Okay, good.
He acknowledged they've been looking closely at their performance
Uh-huh.
and pointed to a couple of factors.
What factors?
Well, for starters, the past few years haven't exactly been normal.
No, they haven't.
The pandemic,
Yeah, 2020 was rough,
It was rough for a lot of industries,
including industrial automation.
especially industrial automation.
So the semiconductor industry bounced back faster,
Much faster, industrial automation took a much harder hit.
and the recovery has been slower.
More gradual. Yeah.
Plus, we've had all this economic uncertainty,
High interest rates, supply chain disruptions,
which makes it hard to invest in new equipment.
like robots.
Yeah. So there are definitely external factors.
Definitely.
But it sounds like Teradyne isn't just blaming the economy.
No, they're not. Smith was very honest about that.
Good.
He said they've identified some internal areas for improvement, too.
Like what?
Their distribution channels, for example,
Okay.
and the need to broaden their product offerings
So they're working on it.
actively, even during this downturn.
Can you give some specific examples?
Sure, remember those heavy payload robots?
The ones for the UR line?
Exactly. That's one way they're addressing new applications.
Okay.
In the Mirror 1200 pallet jack,
The AI-powered forklift.
right? It shows how they're pushing the boundaries.
So they're laying the groundwork for future growth.
Even in a challenging market,
Impressive.
they're confident they can outpace traditional suppliers by 15% to 20% per year.
That's a lot.
It is.
But what about those ambitious long-term growth targets they've talked about?
The 20% to 30%.
Yeah, do they still think those are achievable?
Smith said they'd need better market conditions to hit those numbers consistently.
Okay.
But he also emphasized that they've taken the right steps to be ready for that kind of growth.
When the market turns around.
Exactly. And there are some signs that things might be starting to shift.
Like what?
Well, the analyst brought up Amazon.
Amazon.
Yeah, they're exploring using cobots in their warehouses.
Cobots.
Collaborative robots.
Oh, okay.
They even published a white paper about it.
That's a pretty big deal.
It is, considering how much Amazon already relies on automation.
With their Kiva robots.
Right. And what this white paper suggests
Yeah.
is that they're looking to fill a new niche with cobots.
Which are designed to work alongside humans.
Exactly. And here's where AI comes back in.
Okay, I'm intrigued.
What's exciting is how Amazon is using AI to enable those cobots
To do what?
to handle the complexity of their warehouse operations.
Just not easy.
Not at all. Hundreds of thousands of different products.
Oh, wow.
Constantly changing environment.
A lot for a robot to handle.
Traditional robots would really struggle
So AI is giving these cobots the intelligence they need.
to navigate that complexity.
Okay.
And Teradyne sees this as a very positive sign.
For the industry.
Yeah, they already have other customers in logistics using AI-powered cobots.
For what?
Things like online grocery picking.
Oh, interesting.
They believe e-commerce is ripe for disruption.
From this kind of technology.
Exactly.
So it sounds like Teradyne's bet on robotics could really pay off.
It could if this trend takes hold.
And it shows how AI is changing so many industries.
It's not just about software anymore. It's changing how we design and use machines.
Okay, speaking of investments, Teradyne is guiding for a low teens increase in operating expenses in 2025.
Their OpEx,
Right, most of that will go towards their semiconductor test business.
especially engineering and go-to-market investments.
But they also emphasize their commitment to operating leverage.
Right.
What did they mean by that?
Basically that they expect their revenue growth to outpace those investments.
So they're confident
They're confident in their ability to generate returns.
they wouldn't be making those investments if they didn't think it would lead to more revenue.
Exactly. They're taking a long-term view.
Which makes sense. One analyst pointed out that Teradyne's strategy with these vertically integrated producers,
The ones designing their own AI chips.
right, involves engaging with them earlier in the design process,
Touched earlier.
requires more investment up front,
It does.
but it gives them a stronger position.
In those accounts, yeah, it's strategic.
It's like building relationships that will pay off later.
Exactly.
Okay, let's shift gears for a minute and talk about the mobile system on a chip test market.
The Saki market.
Okay. An analyst asked about this. It seems like that market peaked at around $2 billion a few years ago,
It did.
but it's down to $800 million this year.
A big drop.
What's Teradyne's outlook?
Smith thinks that once the excess capacity is absorbed,
When will that be?
he expects it to happen in 2025.
Okay.
He thinks the floor for that market will be closer to $1 billion.
Okay. So not back up to $2 billion.
Not unless there's a major change, a technological leap.
That would drive a new wave of smartphone upgrades.
Right. Smith specifically mentioned AI-enabled smartphones.
Interesting. So if AI becomes a must-have feature,
Then that could change things.
but for now it sounds like they're focusing on other areas,
Where AI is already driving demand.
like those vertically integrated producers.
Yes, and networking equipment.
Okay, makes sense. They're following the growth.
They are.
Okay, back to robotics for a moment.
Right.
An analyst asked about the sequential growth they're expecting in Q4.
Mm-hmm.
It sounds like a big jump, around 50%.
It is a big jump.
What's driving that?
It's important to remember that their robotics business has historically had very strong fourth quarters.
Okay.
Seasonality.
So not necessarily a sudden surge in demand.
Right. More about timing of sales cycles.
Makes sense.
They also expect continued growth from their OEM channel
Uh-huh.
and those heavy payload robots.
Okay.
And they're starting to see more service revenue, too.
So a bunch of factors are contributing to that Q4 bump.
It's as a combination.
What about longer term after Q4?
Their new pallet jack will start shipping at the end of this quarter.
The AI-powered forklift.
Yes. But it won't really impact Q4 revenue.
So that's more of a 2025 story.
Exactly.
Their current outlook for Q4 is based on what they're already seeing.
Their existing pipeline and the momentum in their core business.
Got it. Now, this next question about robotics is a bit sensitive.
Okay.
It's been about 8 years since they acquired Universal Robots.
Oh,
Right at the time, the semiconductor market wasn't looking so hot.
it wasn't.
A lot of people saw the acquisition as a way to diversify.
It was definitely part of the rationale.
But now Teradyne's core business is booming again.
It is.
So an analyst asked if they still feel like they're the right owner for the robotics business.
That's a fair question.
To be blunt, the analyst even asked if they've considered spinning it off.
Wow.
What are your thoughts on that?
It's a valid question. Conglomerates always face that kind of scrutiny.
Do the businesses really benefit from being together?
Exactly. And Smith addressed it well.
How so?
He emphasized that Teradyne brings a unique set of skills to robotics,
Okay.
especially when it comes to developing complex products.
Like the testing equipment.
Right. Building that equipment requires a lot of engineering expertise.
More than most robotics companies have.
Most robotics companies don't have that level of expertise.
So Teradyne's reputation for quality and reliability,
It's a huge asset.
especially against smaller players.
Absolutely. And Smith believes being part of Teradyne gives their robotics business an advantage.
To become a leader in advanced robotics,
Oh.
but he didn't rule out a spin-off, did he?
He acknowledged that there might be a time when separating the businesses makes sense.
To unlock shareholder value.
Right, but for now they think keeping them together is the best strategy
For long-term growth.
for long-term growth, yeah.
Okay, so they're keeping their options open.
They are.
It'll be interesting to see how this evolves.
It will.
Now, switching back to financials, an analyst had a question about their HBM business.
High bandwidth memory, okay.
Can you give us a sense of the market opportunity there and their share of the market?
Specifically in post-stack die testing.
Yes.
Smith explained that they couldn't really participate in that market until recently.
Oh, really?
They got qualified by a major supplier mid-year
Okay.
and started generating revenue in the second half of this year.
That's a fast turnaround.
It is. And they're working on getting qualified by another supplier.
Which would mean even more revenue in 2025.
Potentially.
So they're gaining traction.
They are.
What about their share in the more traditional DRAM market?
DRAM wafers, that's a more mature market.
Okay.
Teradyne has a strong position with one major DRAM manufacturer.
Yeah?
But their share with the largest player is smaller.
And what about China?
They're doing well with memory manufacturers in China.
Okay, so it's a mixed bag in terms of market share.
You could say that.
But they're making progress in HBM.
Which is key for the industry.
Absolutely.
Yeah.
They're positioning themselves to capitalize on that growing demand,
Demand for high bandwidth memory
which is essential for AI.
and other data-intensive applications.
Before we wrap up this part,
For one.
let's touch on one more question that came up
Okay.
about capacity utilization in the industry.
Right. You mentioned Teradyne is seeing a big uptick.
As those mobile testers are repurposed.
Right. It's a sign of how tight the market is becoming.
Can you quantify that increase at all?
I can't give you exact numbers.
They don't disclose that?
They don't, but Smith did say it's up a fair amount, quarter on quarter,
Okay.
somewhere in the mid to high single-digit range.
So a noticeable increase.
Is noticeable.
And they expect that trend to continue in Q4.
They do normal seasonality and those ongoing upgrades.
Will further tighten capacity?
They will.
Interesting. So the supply-demand dynamics are shifting in their favor,
It seems that way.
which is good for their growth.
Absolutely.
Now, before we move on to the final part,
Part 3.
there's one more interesting point from this call.
Okay, what is it?
Earlier, we talked about Teradyne revising their market size estimates.
Right, based on their performance and new insights into China.
They're getting a clearer picture of how much demand in China is being met by local suppliers.
Right.
And they specifically mentioned adjusting their estimates for the industrial test market. This seems to contradict the idea that AI is the dominant force.
That's a really good point. It does highlight a nuance.
Okay, tell me more.
AI is a major growth driver. Yes, but it's
So-
not the only factor.
Right.
The industrial sector, things like factory automation and the Internet of Things.
They use semiconductors, too.
They do, and that demand is growing.
And is this demand coming from China specifically?
That's what their CEO seemed to be suggesting.
How so?
He said they had to revise their industrial test market estimates upward
Okay.
because they're getting a better understanding of the market served by Chinese companies
Within China.
within China. Yes, it's a segment that's not as visible to us.
So there's this whole ecosystem of demand that we might miss if we only focus on AI.
Exactly. It's a good reminder that the semiconductor industry is diverse.
Multiple growth drivers.
Yes, AI is the big story right now, but it's important to keep an eye on these other trends too.
Absolutely. So while Teradyne is making big bets on AI, they're also well positioned to benefit from growth in other areas.
Like those industrial applications in China.
It's a smart strategy.
Very smart. It lets them diversify their revenue.
Not putting all their eggs in one basket.
Right.
Okay, so as we wrap up our deep dive into Teradyne's Q3 earnings call, here's what we've learned.
Okay.
AI is reshaping the landscape
Uh-huh.
and driving growth for Teradyne.
Big growth.
But it's not the only story.
No, it's not.
we need to pay attention to other trends, too.
Like that industrial demand in China.
Exactly.
And even though Teradyne's robotics business isn't growing as fast as some hoped,
Right.
they're making moves to position it for the future,
Especially in those AI-driven areas.
like e-commerce and logistics,
It's a company in transition
adapting to a new landscape.
and making bets on the future.
They are. It's a company to watch.
For sure. One last thought to leave you with.
Okay.
Their CEO pointed out that those vertically integrated producers,
The ones designing their own chips.
right, they're facing some limitations right now.
He mentioned access to HBM memory and advanced packaging capacity.
As bottlenecks.
Yeah, major bottleneck.
So if those are the bottlenecks, what does that mean for the broader rollout of AI?
That's a good question.
Could those supply chain constraints actually slow down the adoption of AI?
Across industries.
It's something to think about.
It is. Teradyne's insights are valuable. They offer a glimpse into the future.
Not just their own future, but the future of the industries they serve.
The future is full of opportunities and challenges.
Well said. And on that note, we'll wrap up this deep dive. Thanks for joining us.
It's a valid observation, and Smith addressed it head-on, He acknowledged that they've been looking closely at their performance and pointed to a couple of factors.
Okay, like what?
Well, for starters, the past few years haven't exactly been normal. The pandemic threw everything off, and the recovery's been uneven.
Yeah, 2020 was a rough year for a lot of industries, including industrial automation.
Right, and while the semiconductor industry bounced back relatively quickly, industrial automation took a much harder hit, and the recovery has been more gradual. We've also had this extended period of economic uncertainty with high interest rates and supply chain disruptions, which makes it tough for companies to invest in new equipment, including robots.
So there are external factors at play, but sounds like Teradyne isn't just blaming the economy.
No, Smith was very candid about the fact that they've identified some internal areas for improvement, too, particularly with their distribution channels and the need to broaden their product offerings. They've been actively addressing these issues, even during this downturn.
Can you give us some specific examples of what they've been doing?
Sure. Remember those heavy payload robots we talked about earlier? That's one example of how they're expanding their UR line to address new applications. And the Mir 1200 pallet jack we discussed, that's another example of how they're pushing the boundaries of what's possible with robotics. They've also built a very successful OEM solutions channel for UR, which is already generating significant revenue growth.
So they're laying the groundwork for future growth, even in a challenging market.
Exactly. They're confident they can outpace traditional industrial automation suppliers by 15% to 20% per year.
That's impressive. But what about those ambitious long-term growth targets of 20% to 30% that they've talked about in the past? Do they still believe those are achievable?
Smith acknowledged that they would need better market conditions to hit those numbers consistently. But he also emphasized that they've taken the right steps to position themselves for that kind of growth when the market turns around. And there are some intriguing signs that things might be starting to shift.
Like what?
Well, the analyst brought up a fascinating example. Amazon's exploration of using collaborative robots or cobots in their warehouses. They even published a white paper outlining their strategy.
That's a pretty big deal considering Amazon already relies heavily on automation with their Kiva robots.
It is. And what this white paper suggests is that they're looking to fill a new niche with cobots, which are designed to work safely alongside humans. And this is where AI comes back into the picture.
Okay, I'm intrigued. How is AI involved?
What's exciting about this development is how Amazon is using AI to enable cobots to handle the incredible complexity of their warehouse operations. We're talking about hundreds of thousands of different products in a constantly changing environment. That's a level of complexity that traditional robots would struggle with.
So AI is giving these cobots the intelligence they need to navigate that complexity.
Exactly. And Teradyne sees this as a very positive sign for the industry. They already have other customers in the logistics space using AI-powered cobots for tasks like online grocery picking. They believe that e-commerce is ripe for disruption with this kind of technology.
It sounds like Teradyne's bet on robotics could really pay off if this trend takes hold.
It could, and it underscores how AI is becoming a catalyst for innovation across a wide range of industries. It's not just about software anymore, it's about how AI is changing the way we design and use physical machines.
Speaking of investments, Teradyne is guiding for a low teens increase in operating expenses, or OPEX, in 2025. They said most of that will go towards their semiconductor test business, particularly in engineering and go-to-market investments. But they also emphasize their commitment to operating leverage. What do they mean by that?
They were basically saying that they expect their revenue growth to outpace those investments, a sign of confidence in their ability to generate returns on those investments.
Right, they wouldn't be making those investments if they didn't think they would lead to even stronger revenue growth down the line. It seems like they're taking a long-term view.
They are. One analyst even pointed out that Teradyne's strategy with these vertically integrated producers, the companies that are designing their own AI chips, involves engaging with them much earlier in the design process. This requires more upfront investment, but it also allows them to secure a stronger position in those accounts.
It's like they're building relationships that will pay dividends over time.
Exactly. It's a strategic approach to securing their place in this rapidly evolving market.
Okay, let's shift gears for a minute and talk about the mobile system on a chip or Sakaka test market. An analyst asked about this during the call. It seems like that market peaked at around $2 billion a few years ago, but it's down to $800 million this year. What's Teradyne's outlook for that market?
Smith believes that once the excess capacity is absorbed, which he expects to happen in 2025, the floor for that market will be closer to $1 billion. But he was also cautious about predicting any significant growth beyond that.
So no more of those massive booms like we saw a few years ago.
Not unless there's a major technological leap that drives a new wave of smartphone upgrades. Smith specifically mentioned AI-enabled smartphones as a potential catalyst.
Interesting. So if AI becomes a truly must-have feature in smartphones, that could reignite growth in that market. But for now, it sounds like Teradyne is focusing on other areas where AI is driving demand, like those vertically integrated producers and networking equipment.
Exactly. They're following the growth, which makes sense.
Okay, back to robotics for a moment. An analyst asked about the sequential growth they're expecting in Q4. It sounds like they're forecasting a big jump around 50%. What's driving that?
That's right. But it's important to remember that Teradyne's robotics business has historically had very strong fourth quarters due to seasonality. That pattern is expected to continue this year.
So it's not necessarily a sign of some sudden surge in demand.
Correct. It's more about the timing of their sales cycles. They also expect continued growth from their OEM channel and those heavy payload robots we talked about earlier. And they're starting to see a more meaningful contribution from service revenue in that business as well.
Okay, so it's a combination of factors contributing to that Q4 bump. What about longer term? What does that business look like after Q4?
Well, their new pallet jack will start shipping at the end of this quarter, but it won't have a significant impact on Q4 revenue. That product is really more of a 2025 story. Their current outlook for Q4 is based on their existing sales pipeline and the momentum they're seeing in their core robotics business.
Got it. Now, this next question about robotics is a bit sensitive, so I'm curious to hear your take on it. It's been about 8 years since Teradyne acquired Universal Robots, or UR. At the time, the semiconductor test market wasn't looking as promising as it does today, and many saw the acquisition as a way for Teradyne to diversify.
That was certainly part of the rationale back then.
Yeah.
The semiconductor industry was going through a period of uncertainty, and robotics seemed like a promising area for growth.
Right. But now that Teradyne's core business is booming again, an analyst asked if they still feel like they're the right owner for the robotics business. To be blunt, the analyst even asked if Teradyne has considered spinning off the robotics business. What are your thoughts on that?
It's a valid question. Conglomerates always face scrutiny about whether their various businesses truly benefit from being under the same corporate umbrella. Smith addressed this thoughtfully, emphasizing that Teradyne brings a unique set of skills and experience to the robotics space, particularly when it comes to developing highly reliable and complex products. Building those incredibly precise semiconductor testing equipment requires a level of engineering expertise that most robotics companies simply don't have.
That makes sense. Teradyne's reputation for quality and reliability is a huge asset in the robotics market, especially against smaller, less established players.
Absolutely. And Smith believes that being part of Teradyne gives their robotics business a significant advantage, allowing them to leverage those capabilities to become a leader in advanced robotics.
But he didn't rule out the possibility of a spin-off at some point in the future, did he?
He didn't. He acknowledged that there might be a time when separating the businesses could unlock shareholder value. But for now, they believe that keeping them together is the best strategy for long-term growth.
Okay, so they're keeping their options open. It will be interesting to see how this evolves over time. Now, switching gears back to the financials, an analyst had a question about Teradyne's HBM business. Can you give us a sense of the market opportunity there and their share of the market, particularly in post-stack die testing?
Sure. Smith explained that Teradyne wasn't able to participate in the post-stack die test market until recently. They gained qualification from a major supplier mid-year, and started generating significant revenue from that segment in the second half of this year.
That's a quick turnaround.
It is. And they're currently working on securing qualification from an additional HBM supplier, which could further boost their revenue in 2025.
So they're gaining traction in that market, which is good news. What about their share in the more traditional DRAM wafer sort market?
That's a more mature market with established players. Teradyne has a strong position with one major DRAM manufacturer, but their share with the largest player is smaller. They're also doing well with memory manufacturers in China.
Okay, so it's a mixed bag in terms of market share, but they're clearly making progress in the HBM space, which is a key growth area for the industry.
Absolutely. They're strategically positioning themselves to capitalize on the growing demand for high bandwidth memory, which is essential for AI and other data-intensive applications.
Before we wrap up part 2, let's touch on one more question that came up during the Q&A. An analyst asked about capacity utilization in the industry. You mentioned earlier that Teradyne is seeing a significant uptick in utilization as those mobile testers are repurposed for other applications.
Yes, it's a key indicator of how tight the market is becoming.
Can you quantify that increase in utilization at all?
Unfortunately, not with precise numbers. Teradyne doesn't publicly disclose those figures.
Yeah.
But Smith did say that it's up a fair amount, quarter on quarter, somewhere in the mid to high single-digit range.
Yeah. Okay, so a noticeable increase. And they expect that trend to continue in the fourth quarter, right?
They do. They anticipate that both normal seasonality and those ongoing upgrades of mobile testers will further tighten capacity.
Interesting. So the supply-demand dynamics in the semiconductor test market are definitely shifting in Teradyne's favor.
It appears so.
Yeah.
And that bodes well for their continued growth in this space. Now, before we move on to the final part of our deep dive, there's one more intriguing point from this earnings call that I want to explore with you.
So earlier we were talking about how Teradyne revised their market size estimates.
Right, because of their performance and what they're learning about China.
They're getting a better sense of how much demand in China
Is being met by local suppliers.
Right. And what I found interesting is that they specifically mentioned the industrial test market. And this seems kind of like it contradicts the idea that AI is the main driver.
That's a sharp observation. You're right. It does highlight a nuance.
Okay, I'm listening.
AI is a huge growth driver.
Right.
Yes, but it's not the whole story.
Right, there are other factors at play.
Exactly, the industrial sector,
Like factory automation, Internet of Things.
All of that, they use a lot of semiconductors too.
And that demand's growing.
It is.
And is this coming from China?
That's what it sounds like.
What makes you say that?
Their CEO, he was talking about how they had to adjust their estimates for the industrial test market.
Upward.
Because they're getting a better understanding of what's happening in China.
What Chinese companies are doing?
Exactly. Within China, it's a segment that's not as easy to see from the outside.
So we could miss this whole other ecosystem of demand if we're just focused on AI?
It's a good reminder that the semiconductor industry is really diverse.
Lots of different growth drivers.
AI is the big story right now,
Yeah.
but we can't ignore those other trends.
Okay, so Teradyne's making these big bets on AI,
They are,
but they're also in a good position to benefit from growth in other areas.
like those industrial applications in China.
It's smart to diversify.
Very smart. Not putting all their eggs in one basket.
Right, so to wrap up our deep dive into Teradyne's Q3 earnings call,
What have we learned?
AI is changing everything
It's reshaping the semiconductor landscape for sure.
and driving big growth for Teradyne.
Well, no question,
But it's not the only thing happening.
right? There are those other trends,
Like the demand for chips in industrial applications.
especially in China.
And even though Teradyne's robotics business isn't growing as fast as some might have hoped,
Yeah, but they're making some smart moves.
positioning themselves for the future.
Focusing on those AI-driven areas like e-commerce and logistics.
It's a company that's evolving,
Adapting to a new landscape.
making bets on what's coming next.
Absolutely a company to keep an eye on.
One last thought before we go.
Okay, sure.
Teradyne's CEO, he talked about how those companies designing their own AI chips.
The vertically integrated producers.
Right, they're facing some limitations.
He mentioned access to HBM memory and advanced packaging capacity.
As bottlenecks.
Right now, those are the big bottlenecks.
So that makes me wonder if those are the bottlenecks. What does that mean for AI in general?
Interesting question.
Could it actually slow down the adoption of AI?
Because of those supply chain constraints?
It's something to think about as we see how this all plays out.
It is. Teradyne's insights are valuable.
Yeah.
They give us a glimpse into the future.
Not just their future, but the future of all these industries.
And the future is full of opportunities and challenges, as always.
Well said. On that note, we'll wrap up this deep dive. Thanks for joining us.